Welcome back. You're listening to Get Real with Bob and Stacy. You're joining us for our Leaders and Legends segment. Joining us by phone today, we have Adam Torres, CEO of Century City Wealth Management and author of the book Money Matters. Welcome to the show, Adam.
Hi, thank you. I really appreciate you both having me.
So I want to give some background on Adam. He is the CEO and visionary force behind Century City Wealth Management, a boutique firm dedicated to the needs of families, organizations, foundations, and public funds. He has been featured in major publications such as Forbes, Investors Business Daily, and The Street, to name a few. In Adam's 11-plus years of experience, his roster of clientele has included over 1,000 business owners and 3,000 high-net-worth families. Adam was previously responsible for the relationship management of over 400 families with a cumulative net worth exceeding $500 million. Adam is an international speaker, author of Money Matters, 21 Practical Lessons for Everyday Success, and noted authority on leadership, team building, and change. So first, before we start, tell us about your book, Money Matters.
Well, thank you. I appreciate that that tee up, so to speak. When you hear somebody else write or talk about you, it's kind of like, wow, I did all that stuff. So I appreciate that. The book really was a culmination. So last year I did a speaking tour in China. And on that trip I met a pretty prolific speaker in the wealth management space by the name of Barry LaValle. And he saw my material and he saw what I was presenting to the Chinese firms, and he said, you need to bring that to a wider audience back home. So that really spurred the conversation and spurred the writing of the book. The book's really straightforward, so it's 21 lessons, as the title alludes to, and it's really how do we change our lives, change our money management patterns to ultimately do what we all want to do, which is, build wealth, but also build that security and financial future.
Huh. That's awesome. So I don't have a retirement account, but I have an awesome Jimmy Choo collection. Do you? Is there anything in the book about investing in shoes?
There isn't, but I'll tell you, there is a chapter called "Don't Die at Your Desk."
Oh, see?
There is.
I need this book.
Yeah, you do.
And that alludes to, you should have a retirement plan.
But maybe something more than shoes.
Absolutely.
All right, so give us a couple other of the 21 lessons.
One lesson that I think when people think of a financial plan, I mean, the first thing a lot of people do that have never created one is they cringe, or they think, I know how to manage my money, so what do I need that outside view from? And so now I write a little analogy in the book where I try to compare what a financial plan is to, movie production. So I'm in Southern California, so at Century City. So my backyard for my office is the Fox lot. So if you can imagine the type of clientele. So sitting in my office one day, I was thinking, how can I relate this to everyone, the broader audience? So I think, well, Hollywood, right? So one of the chapters in the book is simplify your life with a script. So I paint this picture of, imagine that you're the director. You're the director of this big film, and, there's all these moving pieces around you. There's, the actors are moving. You have the lights, you have the sound crew, you have all these things going, and everybody's looking to you for direction. Mm-hmm. Now, imagine if you go to reach in your book or in your bag and there's no script. That's the way a lot of people run their financial life. It's for keeps. All the moving pieces are happening, and they're really, for lack of better words, winging it. So my thought is a financial plan is extremely important, just like a script is for a movie.
Huh, I love that. That's kind of cool.
Can buying shoes be part of that plan?
Absolutely. And no, this is good. And I'll tell you, in the beginning, if we think about the beginning of a person's career, think of your life kind of like an indie film, right? There's not that much money. It's very low budget. You don't have much to put into the production. But as you progress through life, if you treat that indie film right, as you progress through life, and when you're in the point in life to where you have the budget for a blockbuster, load up on all the shoes you want.
Huh. I love it.
I'm picturing the pie chart for Stacy's
But-
investments.
I know.
4% in other investments, 96% shoes.
Somebody's going to want that collection when I
Yes.
pass away someday.
Yes.
Absolutely.
So I know you work with a lot of entrepreneurs. What inspires you to help entrepreneurs?
You know, growing up, I'm from Michigan, so I'm from Detroit originally. And growing up, my father owned an auto body shop, and so I've always been around entrepreneurs. I'd always been around that kind of feel. I've always understood their challenges. So in my life and my progression, it's just something that's been in my heart. Like I understand the entrepreneurial struggle. I am an entrepreneur myself, right?
Mm-hmm.
So I understand the struggle. I understand the challenges they have. I understand that when an entrepreneur is doing well and when they're focused on their business, they're laser focused. They don't really have time, nor do they necessarily develop the expertise to manage the larger picture. And I get that. So that's where, someone like me comes in. So that's where they're the best clients. They're just the best clients for me. And they're extremely loyal. Once they know that, where my heart's at, they never leave me. So I just love the clientele.
But I also think entrepreneurs sometimes are the worst as far as managing wealth. Because I know as an entrepreneur, I've been an entrepreneur for 20 plus years. And anytime I have extra money, I'm like, okay, what business am I buying next?
Mm-hmm. I like to say I have a tough love approach.
Mm-hmm.
So I'm not, being an entrepreneur, it's always got to be our way, right?
Right.
So it takes a certain skill set and a certain type of person to work with an entrepreneur, because what you said is correct. I can tell you that I've started with many an entrepreneur who in this area making $500,000 to $1 million a year with less than $50,000 in savings, right?
Right.
Because every time they have an extra win or an extra cash flow, it's already spent or it's already going on R&D for exactly what you said, the next business.
Right.
And the challenge really becomes, at what point in life do you start moving some of the assets from your business side of your balance sheet to your personal side of your balance sheet? Because by definition, it's kind of like, when somebody starts a business and they think they're going to grow it for 30 years, the idea that you're going to potentially start that business, grow it for 30 years, sell it at the end, and somebody's actually going to pay you what you think it's worth, that's like winning the lottery. What are the odds of that happening? So once you have a larger context of really what life is as an entrepreneur, which in my opinion can only be given from the outside looking in, because if you're not doing it that way, then you don't really have that ability to understand it. Then you start to be able to build true wealth, because you can understand that, all right, that venture went well or didn't go well, but this is what I got out of it. Other than the experience, this is the money that I got out of it that's going to continue to stay on my personal side of the balance sheet. Exactly.
Because I probably need somebody like you, because the devil's advocate in me would say Colonel Sanders started his business at 85, poured a bunch of money into it, and then sold Kentucky Fried Chicken for quite a bit of money.
Was he 85? I thought he was a little younger than that.
I don't know. He was
I
old.
thought he was in his 60s.
I know the story well. He just received his first Social Security check, and that's when he understood that he couldn't live off of that. Was the way I heard the story told. But I love that story, and I'm a huge fan of it. And I guess my response would be, yeah, but how good is your recipe for chicken?
Right. Mine's not
That's
good.
a good point.
I don't even eat meat.
Know.
A vegetarian selling chicken, that'll go over well.
And do you really want to deal with, a couple thousand no's with only a recipe for chicken when you receive your first Social Security check?
Right.
Maybe, maybe not, but he did it because he had to.
Right. So tell us about, I know you went on a multi-city speaking tour in China to talk about wealth management. What were some of the key takeaways from that trip?
Wow. So the first thing I would say is my process and my style, just when it comes to investing or when it comes to understanding what's going in the markets, is I'm really hands-on. And I've been like that from a young age. So in college, my major was international relations. Why? Because I didn't, believe the news they were telling me. So I wanted to go to Europe. and I wanted to see what was actually going on at NATO. So I did do that, or the European Parliament and a number of other places to see what was actually taking place. So getting back to your question, so thinking about China, I had the opportunity, so Moody's Analytics, they've been kind of courting me to go there for a while to speak to some of their clients, which are very large firms, so top 10 firms in China, to give you an idea, and to speak to their executives. And their whole thought process is, how do they help those markets evolve faster? So to change from a more speculative culture to a more wealth management driven culture, because what people here don't really realize, and I guess this was one of my big takeaways, and I didn't really catch it until I was there and I probably talked to, I don't know, 3,000 or at least 2,000 financial professionals there. So that's everything from brokers to top executives. These are the people that were in the crowd. And in talking to them, it really reminded me, so China reminded me a little bit of, let's say, the U.S. market maybe in the 70s or 80s, where it was very driven on, a broker talking to somebody about the next investment that was going to make them money. They do a lot of private equity out there. It wasn't really set on the concept of wealth management, which, if you think about the U.S., for the average person, that's a very new concept. That was really introduced, that concept and word, pretty much in the 80s is when that took place, is when the introduction of getting the bigger, masses to understand that concept. Prior to that, it was only the wealthy or the super wealthy that had access to that, and we didn't call it wealth management or a wealth management or look at it in the context that we do today. It was really just called, you had an estate attorney, you had a CPA, they knew the law, and then you had your stock guy, and and your insurance guy, and they all talked to each other. But the regular masses didn't have access to that. In China, I would say it's like that right now, based on my experience over there. Very small subset of the wealthy population have access to a real wealth management concept. And a lot of the firms there are just actually starting divisions that do wealth management and not just sell products.
Wow. That's really interesting.
So I had to go. I'm one of those people. I just had to go.
You're the pioneer
to see it for
there.
myself and to find out. I don't trust the news. If I'm getting my information from the news, then I'm losing. That's what I say.
So what do you think one of the biggest mistakes you find investors make?
I think that they don't match their investment with their goal. So that's the number one mistake. They don't match their investment with their goal. So I'll just give you an example that I see in real estate a lot of times, and is that, when somebody goes into a property, they don't think about their exit strategy for it. They're not thinking, if the market goes south right this moment or in the next year or two, and, that home or that property that I was fixing up to flip is now going to be on my books a little longer. What does that look like for my overall financial picture? Like, how am I over leveraged? So I think that's the main thing, is that, in any investment you're going to do, assess that. And I use a simple acronym. I use it in the book, and it's just called, and I look at this from a broad picture for any investment that I'm also personally going to do or think about for a client. And it's just simply a RTD. So the R stands for risk. So really think about, is this investment, does it have a little bit more risk than I'm willing to tolerate? Can't answer that question. Probably makes sense to step back a little bit. Next thing is the T, so that stands for time. And that's really asking yourself, how long do you want to be in this investment? And really think about that in terms of if you're going to commit the capital to it. And that could be for anything. So again, whether it's a business, a portfolio, a piece of real estate, across the board. This is a really high-level way of looking at it. And then the D stands for diversification. So how is this one investment that you're considering making, how is that going to affect the rest of your portfolio? If you're putting it all in on one piece of real estate, does that make sense for you? If you're putting it all into the stock market, does that make sense for you? Each person's going to be a little bit different, but if you can really answer each one of those components of the acronym correctly, the RTD, And then at the end of all of your analysis, then at the worst case scenario, you're not going to be surprised. Like, plan for the worst on that.
Right. Wow, that's awesome. Simple.
That was the point.
So
that you can remember it for anything.
Yeah.
RTD. So if you're gonna add a couple new pair of shoes, you got to ask yourself, what's the risk in this?
Yes.
Is the fashion going to change soon, or
Right.
what? I don't know. Would you want that commitment to that pair?
Good stuff. And diversification. I could always invest in Jimmy Choo. It doesn't necessarily have to be in the shoe. It could be in the company.
One track mind.
Yes. We have with us Adam Torres, and he is the CEO of Century City Wealth Management and wrote the book Money Matters, 21 Practical Lessons for Everyday Success. Adam, where is the best place for people to buy the book and follow your business?
On Amazon. So if you just put in Adam Torres or Money Matters, Adam, it'll come right up for you. And the best place to follow my business, centurycitywealthmanagement.com. If you're on Instagram, ask Adam Torres.
Awesome. All right, I'm going to follow you now. Thank you so much for joining us today.
Thanks, Adam.
All right, thank you. I appreciate you both having me.
Anytime. That's all for this edition of Get Real. Make sure you tune in again next weekend for more.